Hola amigos, my name is Juan Estrella and welcome to my channel. Today we are going to talk about FedEx with the ticker FDX. Perfect. So yeah, let's jump into the just a kind of introduction in regards of what is specific the FedEx. I'm pretty sure most of you they already know what is this about. But yeah, just a kind reminder, it is an American multinational delivery services company. Founded on 1971, 50 years ago. The founder is Frederick W. Smith. The area served is worldwide. The headquarters are in Memphis, Tennessee, and USA. Okay, so yeah, to the next slide, we would just want to talk about again the PE ratio, forward, PV, insider ownership, insider transactions, and the short float. For the people that you are watching this video from your smartphone, I will just give you a small zoom in order that you can see the numbers. Okay, perfect. So yes, in the side of the PE ratio, we have a 27.52. The forward PE ratio is the 13.51. So as a kind reminder, remember that if it's lower than the 20 in the forward PE ratio, that's a very good sign. But again, it's not all the time. The price to book is 3.18. That means that, for example, if um, um, for each amount that you are paying, you will just receive $1. In this case, for each $3 with 80 cents, you will just receive $1 in case the company can go to the bankruptcy. It's a low probability, but just take in mind of this. Now to the insider ownership, right now we just have a 0.10%. Remember that this is only for the insiders, and I like to check this specific data because we can just analyze if it's convenient for us, because sometimes in this case, if you see the insider transactions, basically for that specific percentage, basically almost 40% of the employees from the FedEx, they sold their stocks. So yeah, this is something going on. But yeah, sometimes it's because, for example, in this case, the employees, they just realize that now they are just going down super high, this stock. But yes, I don't think that is a bad sign. However, remember that we just need to see also the side from the employees, the CEO, managers, executive chiefs, and so on. Now to the institution ownership, we have a 74.80%, and the institution transactions 2%. That means that almost 75% of all the stocks basically is owned by the institution ownership, like the hedge funds or big institutions. Basically, I call them the big fish. And between that, basically they sold almost 2%, basically a little bit more than 2% in the last 3 months. Now, on the side of the short floor, I also like to see this specific data. So basically, that means that how many people they are bidding for this stock go even lower. But at least there is a 1.22% that it seems to be low. However, basically, if the actions go up very quick, at least these investors who short, basically they will need almost the complete day just to try to get another stock for a specific price that they needed. Okay, so now jumping into the next slide, now we just have a graph. This one, it was from the trading view. And yes, as you remember, I like to see these specific indicators. That is the relative strength indicator, this and also this. So basically, I just highlight these specific two places, and now we will just zoom a little bit more. In this specific place, we will just jump into this. So as you see, today that is January 5th, 2021, basically we close at $253 with 80 cents. And basically after the aftermarket, basically is right now you can buy this specific stock at 253.29. So basically it seems that now is going up again. But yes, I mean we just need to check another data because maybe this stock can go even lower. But yeah, we will see. Okay, so now we will just jump to the next side on this specific place, relative strength indicator. And as you see, I like to compare this one because as you see, in general, we just realized that basically it's oversold, this stock. So this is, at least in my case, I like to see this specific sign because for me, that means that it's a good entry point to buy the stock. However, just please do your own diligence, okay? Because this one is only for the entertainment purposes. Okay, so now just let's zoom a little bit more about this specific case. And as you see right now for January 5th, right now we just have the opportunity just to buy a little bit more on FedEx. As you see, there is a super lower, and this is a very good point because in any moment, in any days or weeks, obviously the stock will go up again. Okay, so now something that I just want to show you in this case is the sector median, and also how it's about, for example, the another companies that they are similar as FedEx. In this case, for example, we can just compare as a UPS. So basically, the UPS they will also be in this specific sector, but we will just check. Okay. In this case, the sector median, it says that the forward PE ratio is in average 27.38, and this is a very good point, at least an extra selling point for FedEx is that the forward PE ratio, we have a 13.51. Actually, I just want to zoom in this specific case. So again, remember that if the sector median is higher than the stock that you want to buy, or at least a high probability to buy, this is a very good sign. So as you see, again, in general, we have a 27.38 in the sector median against the forward PE ratio of the FedEx is 13.51. Now we will just compare, for example, the same stock, but now for how was the performance for the last years, at least in comparison with the forward PE ratio. Now, for example, currently we have a 15.63. It's not a long ago, but at least, for example, 2020 we have 16.03, 2019 13.59, 2018 9.93, 2017 19.19, 2016 15.53, and 2015 14.06. That means, and also, for example, as you see, basically it was an average of, if I can say that, it was just between the 17, 14 on average. Currently we have 15. So this is something that you can just take in mind, that this is another extra selling point in order that maybe you can just buy some couple of stocks in the next couple of weeks if this stock can go even lower. So again, at least, for example, in comparison, the lowest forward PE ratio, it was in 2018. Remember that most of the stocks for that specific year, it was basically this almost the stock market just lost a lot of interest. That's the reason we had a 9.93, but at least the highest it was in 2017, 19.19. Okay, so now let's jump to the next slide. In this case, I just want to show you in the comparison that I use. Basically, I'm using the earnings per share. Again, this that means that for each stock that you have, how much money you are generating for that specific stock, at least for each stock for each share that you have. In this case, for each share that you have, you will be having earnings of $4.63. And actually, I just want to zoom a little bit more again for the people who are using smartphones. Basically, the last quarter in 2020, it was actually on December 17, and the earnings per share was 4.63 cents. and the estimate actually was almost $4, $4, and actually was a surprise of 13.51%. So it was at least overcome the expectations of the investors. But even though just basically right now the stock is lower, but yeah, you know, the behavior of the market, we also, well, actually we don't know how it works. You bet that something that will go up and actually is going just down. So that's the reason that is super is good just to see the technical, to have a technical analysis and also a fundamental analysis. Perfect. Okay, so now I just want to show you another something that I just realized, and it was also a good comparison. So for example, if we just compare from the last quarter in 2020, it was the earnings per share, it was $4.63 against the last year, then in 2019 basically it was $2.14. So this is another second selling point that I like to compare, and this is something that is also relevant. However, please just investigate, also do your own diligence before just to buy stocks. Okay, so in this slide, I just want to show you that also FedEx offered a dividend yield. Basically, it's low, but anyway, it's okay. 1% is okay because most of the growing stocks basically they don't have any dividends and in this case FedEx, because they have more than 50 years. Basically, they offer $2.60 for each share. That means that is 1.03% each year. Okay, so I just want to show you that there was another, the more important news that I just found, and in this case it was from full.com is the name of the website. If you want to check, also the reporter, it was Lee Samaha. It was in January 4th. And actually, for example, I just want to show you that it was a news that it was what was the better share or stock to buy in 2021. So basically it's between the FedEx or UPS. At least in my humble opinion, actually this is something that I just want to tell about for the next in the next videos. I just want to tell about the UPS, because actually I just compared FedEx and UPS, and actually they have some specific, they have more specific points, selling points than others, but at the end, yes, they are they have they have a lot of difference, but you can just decide and compare if it's a good stock for you to buy. Okay, so now to the next one. I just in this case basically I just want to show you how was the resistance. Basically since July just jumped super quick, and now when a rise to the December, at middle of December, is when the stock broke the resistance, and now it's to just go out almost to the $300 that it was expecting. Basically right now we just have 252.38. So yeah, this is another extra selling point. But yeah, however, please check another data. If there is something that I don't show you, please let me know, put me on the comments, in order that I can just provide you the best data that you need, in order that you can just consider if it's good with the stock to buy it or not. Okay, so yeah, finally I just want to show you the performance for this this stock, at least before finishing this video. So the monthly performance, it was the last month it was minus 13.50%. In the last 3 months it was minus 2.33%. In the last 6 months 59.69%. And the current year minus 2.48%, and 1 year ago basically it was a pretty good gains. It was plus 63.55%. Okay, perfect. So yeah, thank you so much, guys. So remember, check, and please just let me put in the comments, and also remember, for at least for this channel, remember, eat, sleep, invest, and repeat. Thank you. See you on the next one.